Wherever I'm going, people are talking about India as a bright spot. India is like an oasis in the desert across the globe. Lots of things are happening across the globe, but India is still resilient, buoyant, I would call it. Just want to know your views very briefly. How things you think why India is as an oasis today. So,
Yeah. I think the last 20 years have been an era of globalization, interaction with international markets, and India has integrated well with that. But over the last 2 to 3 years, we have seen a little bit of decoupling. And I think out of that, India is coming out kind of better for a multitude of geopolitical factors and other reasons as well. I think the good thing about India is that it's a source of demand and it is a source of supply. So to that extent, we are self-reliant in many ways, but we are connected with the global world in terms of whether it's capital, other sources as well. So it's kind of a bit of both.
got it.
What's hurting much of the global economy is inflationary trends, right? The Indian inflation is sort of pretty much where it was 3 years back, 4 years back, or is in line with long-term trends. And hence, it's a sign of acid bubbles that were not created in this part of the world, unlike a lot of other regions and other geographies, and the relative for India has massively improved, and that's what's standing out.
It is clearly one of the most sizable, fastest growing economies of the world, right? Not only is it growing fast, the entire working age population is almost 2/3, right? So this brings with it not only the ability to have great consumption stories across every theme, be it consumer, healthcare, infra, but also very skilled labor available, right? And of course, the most important is the whole ecosystem of regulatory, right? Whether it is RBI or SEBI, or the whole PLI, just trying to, or the digital infrastructure, just trying to create the ecosystem to be able to take us to the next level.
Investment into the country plus deals in general. One thing people always look for is stability, both in the economy side as well as the regulation, laws, courts, how they're working.
When we are establishing that India is the bright spot, it is the oasis from every aspect, global or local perspective. M&A we have seen last year also grown tremendously. I think last 4 years we have seen M&A as a vehicle in the industry has grown tremendously. Today, 2023, we have a mixed feeling. I think sectors which have seen like healthcare, financial services, manufacturing, a lot of mid-market and SME also went into the, M&A, global expansion went into the. Today we are seeing that, there are mixed feeling in 2023. Is it really picking up the pace or not picking up the pace? What do you think has contributed to the robust environment of M&A?
I think the first is the general underlying economic growth. Big picture, if you think about it, we have over the last 2 decades grown at a real GDP growth rate of 6%, so to say, which is well in excess of many of our peers. The second is availability of capital. Last year, financiers provided acquisition financing of the order of $30+ billion to acquirers doing M&A, which is up some 5 times from 5 years back. The third is that, and Pancham will come in here, is that financial sponsors are playing a massive role in terms of providing capital in the context of M&As. The number of buyouts have, in the last 5 years, from financial sponsors have been cumulatively more than the 15 years prior to that.
Your views, robust environment on M&A?
I think the big change that has happened is the aspiration to scale and scale faster. There is a certain amount of impatience to scale as you meet most management teams around you. Moreover, what's happened is the sponsor universe in the country is matured, and people are going for buy and builds. There are a lot many more control growth transactions taking place from the sponsor side of things, and there is a concept of creating platforms that has been created where we've built 2 platforms where we've made anywhere between 6 to 15 acquisitions in just one deal, right? And that's the buy and build we go about doing.
Desire to scale faster and obviously having a capital is associated with risk as well, right? I mean, I find both sides of the coin working in favor of us, right? Is it that the M&A activities is less riskier than other activities?
Not really. I mean, from a shareholder perspective, whether he's betting on two companies instead of one, right? He's betting on one business that he's buying into, and let's say that company is buying another business. There are two parts to that whole thing. Scaling comes with risks. It cannot be risk-free. Of course, an M&A can go wrong, and that can really pull you down. Hence, there is a need for ample diligence at that point in time.
See, coming to this theme, why there is so much of M&A, I think the reasons are clearly everything leads from the capital markets, right? Capital markets are rewarding people who are efficient, right? So conglomerates are shedding where they are subscale and going into areas where they can be, market leaders. Second, what is happening is this whole, one very important thing why financial sponsors are so excited to be in this country. If you see just in the calendar year 2021, they have taken or they have seen exits of $36 billion, right? Which is equivalent to the amount of exits right from 2010 to 2015.
True.
So the point is they feel this is not Hotel California. They can exit, right? So they can come and they can go, right? And that has given a lot of confidence to people all over the world. 50% of all these exits happened from strategic buyers, right? So the PE universe now has not only other PEs who buy it from them, but also strategics. So the whole ecosystem of buy-sell has become very mature, of course, aided by a very robust, like Kasturi was saying, robust contract and legal framework, which allows them to expedite and close deals in the most efficient manner.
Kasturi, I'm coming to you. While they are creating this strategy also, but time has also told us that M&A is not very successful as well. After the integration issues and regulatory issues and synergies are not there, the value which was ascertained at the time of understanding is not there.
Yeah.
What's your views? How we can successfully robust build an M&A strategy?
I think that's the critical piece. And what you mentioned as well, that diligence, spending the time to do the diligence is so important. We sometimes get so hungry to do the deal that we kind of, gloss over some issues. We don't look into it. We don't think long term in terms of how do we ensure that the integration is happening in a correct fashion. And I'm not just talking from a legal perspective. So I think it's seriously critical to look at that because when you talk about an M&A strategy now, it's not a like for like. You could be offline buying an online. How do you marry the online and the offline? What we call the phygital world. So spending the time to do the diligence, brainstorming, understanding what are the risks you are, likely to face. I think it's very important to take the time to do that well.
No, it's a very important point. My next question actually comes, is it the future profits they want to capture or is it the growth which they are looking at it? What are the different types of sort of factors important for an organization to go after for M&A activities?
Sure. I think there are 3 or 4 key levers that drive M&A activity. I think first, just scale. What you're doing, you want to do more of that and on a bigger format. I think that's one. The second is geographical footprint, right? You want to, you are an India play or you are an India plus, let's say, regulated markets play. If it were a healthcare business, you want to do other sort of emerging markets. So you go look for acquisitions in those markets. The third is buying into capabilities. Like she mentioned, you're an offline only business. You want to buy capabilities that sort of help you sell to consumers online, or you buy development capabilities if you are a pharma business. So that's the acquisition of capabilities. And the fourth could be diversification, right? You see growth prospects slowing down, maybe in your business and as what we call in financial terminology, terminal value, right, of your business. You want to increase the terminal value of your business, and you may want to buy into faster growing areas that are sort of slightly ancillary to what your core business has been, and you've seen large conglomerates do that.
It would be wrong to say that people are chasing growth.
Yeah.
Just because eventually that growth will lead to cash flows and profitability, as the case may be. So finally, it all boils down to that one metric, which is expectation of future cash flows and what is the price that you're kind of.
So sometimes, you have to look out into the future and see where is your target segment, target audience moving. And you need to build new demand pools. Forget growth, forget profit. You need to just build and create new demand pools for your survival. And for that, if you need to acquire something at valuations which standing today are not justified, but you have the ability to, with your firepower of cash or being a conglomerate, assimilate it and grow it, sometimes they could be a survival engine for you, right?
Can't agree more with you. And that throws a different style of challenge and a bigger, complicated challenge. And Kasturi, I'm coming to you. You must be solving those challenges from any organization. I mean, I have no idea if I integrate WhatsApp kind of a company into my environment. First of all, how do I work with WhatsApp? How do I value that company? I'm just saying WhatsApp is a global company, but there could be Indian sort of a company as well. Startups are coming up and they get integrated as well. Do you think that is the real challenge today?
In terms of the integration? Or
Absolutely. Not only integration, but how do I really talk to them? I have no idea about their business.
Yeah,
right?
no, I think that's the leap of faith, right? You've got to find the bet the company deals, right? Because that's really going to be ultimately the differentiator between you and the next guy. And really, how do you talk to them? Yes, that's a tough one because, if as we were discussing, if you are a steady state kind of a business, a brick and mortars, like a company that does cement, what is the next goal for you? There are only that many things that you can do. So the leaders will emerge from who can think the furthest.
If I am now looking at the strategy of an M&A activity, I need to find capital. Now, steady state organizations are squeezed from a cash flow perspectives and capital perspective. One is, and the global slowdown is also happening. I mean, if you look at it from that side. So it's always a conundrum for me as a organizational leader, as a strategy leader. Should I go it now? Should I wait for some time? Where should I raise the capital from? Where the capital is going to come? Which type of capital I should be looking at it? Should I pull in my money or should I, use the dry powder available in the market and for that? I think that's the little conundrum most of the people would be finding it, right?
If you want to do an M&A deal, distressed deals, finding the right players, not just in India, but outside, because now the opportunities are really, they're coming to the fore, right? So if you are looking to do deals, to me, this is the best time to start to scout that.
No, actually, to be fair, given the last 3 years that has happened, the Indian corporate sector debt to EBITDA is at all-time best, right? All-time low. So actually, corporates are sitting with a lot of cash. And so are the buyer universe or the financial sponsors. They're raising large amount of global funds, whether it's impact funds, ESG funds, or the normal buyout funds. It's easier now to do larger deals than smaller deals, believe you me, right? Because people want control, they want to do that.
So if you think about M&A, I think 3 or 4 things have to line up all together. I think firstly, there is no right or wrong time for M&A. It's a question of, it has to be fundamentally driven by business strategy. So the acquisition that you want to do has to make a sound business fit. That's point number 1. Point number 2 then is that what's the value at which it is potentially available? I think we are in an interesting environment today. We track typically the trailing 5-year market multiples as a yardstick to see whether markets are over, on the higher side, on the lower side. I would say today we are trading at about 5 to 10% below the last 5-year average, so to say. To that extent, it's a good time. Then the third question thereafter is that what's the pace of growth that you want to take? I mean, are you going to do 1 acquisition, 2 acquisitions, do organic growth? That's a question of, it's not a question of whether leverage is too high or too low. I mean, it's growth, ambition versus prudence, right? So there is no right answer for that.
I mean, we cannot conclude the discussion without the new sort of a baby on the block, which is ESG being discussed, right? I am now looking at investors specifically asking questions around ESG parameters. They are integrated across the board in the value chain. There are impact funds being created, which are being part of the discussion today. How true is this story, or is just sort of a tick mark form filling which is happening?
This whole theme, specifically, I think the whole renewables, wherein we have a huge supply that can be helped build out for India just to, even if we do 50% of what is required in the next 5 years, we need $15 billion of investment, right? And we can do with a lot of external capital to help us accelerate that. We are, after all, the largest consumers of electricity in the sort of world. And
There is good and bad. I think I'll make the more of the controversial statement. It is woke, right? And sometimes wokeism falls flat on its face. So it's important to understand what the ESG demands are and how to implement them correctly. Otherwise, it is becoming a check the box, right? So when the investments happen, then you do a very good screening. Then you say, oh, there's a 40-page kind of a dossier. You have to follow these policies. But I'm not always finding that investors are going back and saying, come on, show me by audit that you have actually complied. And that's where I feel sometimes we are,
tick in the box, yeah.
we are missing the woods for the trees. And we should be doing a lot more, because the cost of damage through the climate concerns, through not having governance right.
No, I understand. And embracing ESG is becoming, I would say it's half-hearted today, but we need a full heart to be there for the people to understand ESG better. It is for the better of the company, better of the revenues and reputation and brand as well. But not many people have thought about it, or they know how to think completely.
From a Indian mindset perspective, as we look at transactions, ESG diligence is a must. We don't release capital if we do not sort of find the ESG diligence, so to say, checking the right boxes. And if there are issues or sort of divergences from what are compliant practices, you need to create what we call CAPAs, corrective action plans, and then they become legally binding on businesses to make sure that the corrective action plans are met. Because from a sponsor perspective, people given money not permanently, they have to take it out again, and someone is going to come back and do the same DD on you, right? So it is imperative to follow up and make sure that just from a diligence standpoint, it's sort of you meet all the right standards.
I think ESG is actually more softer. It's the cultural mindset, management-driven, leadership-driven aspect there. That's embracing ESG true sense, right?
For a moment, I want to focus a little bit on the lesser talked about aspects of ESG. The fundamental G, governance. It's at the fundamental root of any investing that you do, and everybody has been focusing on that all through. It's not something that's new and different, so to say. The second aspect is social, so to say. Now, clearly investing in your social infrastructure in and around you is sound business sense. So we have been doing it all through in some shape or form. It just brings a lot more focus and attention to these aspects, and that's very good. It's good for all of us. It's good for the world. It's good for the environment, and it's here to stay.
It's the right time. We are seeing two things happening. One is people are spending a lot of money on capability build-up, right? Whether the convergence comes into play. We will also see consolidations happening, right? Both the world's consolidation. I mean, the new world consolidations will also happen, and the old world consolidation will also happen. I think that's what we will see further. But with this, I'm going to thank you all, and it's once again an honor for having you all today.